Well, good morning and welcome everyone. This is an open meeting of the Public Company Accounting Oversight Board on September 26, 2017. We want to welcome all of you who joined us today in person or listening to the webcast of this meeting. Today the board will take up a recommendation to issue a supplemental request for comment on proposed new requirements that would apply to audits involving accounting firms and individual accountants outside the accounting firm that issues the audit report. Before we proceed with the agenda, I'll note for the record that all board members are present. The first and only order of business before the board today is a staff recommendation that the board issue a supplemental request for comment on a proposal to amend its auditing standards relating to the supervision of audits involving auditors outside the firm issuing the audit report. And to present the staff's recommendation for this item, I will turn this over to Hunter Jones and Dima Andrienko, Keith Wilson, Stephanie Hunter, Andreas Vanelli. Our chief auditor, Martin Bauman's under the weather, but assures us his staff is well prepared. We know they are. Mr. Jones.
Good morning, Mr. Chairman and board members Harris, Ferguson, and Franzel. The Office of the Chief Auditor is pleased to present a recommendation to the board to issue a supplemental request for comment on several revisions to its 2016 proposal on audits involving accounting firms and individual accountants outside the firm issuing the audit report. The proposal and this related supplement are very important as they relate to, among other things, auditor performance on audits of multinational companies, including audits of the largest global entities. Many companies have significant operations outside the country in which the auditor of their financial statements, or lead auditor, is located. To audit the global operations of their clients, lead auditors often assemble a team involving several other accounting firms and individual accountants, that is, other auditors. In some cases, a single audit may involve more than 20 accounting firms. The work of these other auditors may account for a significant share of the audit and may involve areas of high risk of material misstatement. The use of other auditors is especially prevalent among larger companies audited by larger accounting firms. A lead auditor who works with other auditors may encounter differences in business practices, market conditions, and cultural norms between auditors in different parts of the world. In addition, accounting firms involved in the audit may have different systems of quality control. All these factors can pose challenges in the coordination and communication between the lead auditor and other auditors. Without adequate supervision by the lead auditor to address these challenges, deficiencies in other auditors' work can result in deficient audits. Both the 2016 proposal and today's revisions are designed to increase the lead auditor's involvement in and evaluation of the work of other auditors, enhance the ability of the lead auditor to prevent or detect deficiencies in the work of other auditors, and facilitate improvements in the quality of the other auditor's work. Now I'll turn the floor over to Dima Andrienko, who will discuss the reasons for issuing the supplemental request for comment, and then Stephanie Hunter, who will provide an overview of key revisions. But before I do, I would like to acknowledge the many people within the PCAOB who provided significant contributions to this project. In addition to Dima and Stephanie, I would like to express my appreciation to Hunter Jones from the Office of the Chief Auditor, the team that led this project. I would also like to thank our colleagues from other divisions for their significant contributions, in particular Andres Vanelli, John Powers, and Jun Suk Lee in the Office of Economic and Risk Analysis, Santina Roca and Elizabeth Echternock in the Division of Registration and Inspections, Ray Ham in the Division of Enforcement and Investigations, and Matt Golden in the Office of General Counsel. Finally, I would like to thank the staff of the Securities and Exchange Commission for their support and timely assistance in this project. Dima?
Thank you, Keith. Good morning. First, I would like to say a few words about the basic elements of the last year's proposal. Then I will talk about the comments received by the PCAOB and today's supplemental request for comment. The amendments the board proposed in 2016 are designed to enhance the lead auditor's oversight of the other auditor's work. The 2016 proposal would improve the existing standards and impose a more uniform approach for the lead auditor's supervision of other auditors. In particular, the 2016 proposal would require that the lead auditor supervise the other auditor's work, except when the lead auditor divides responsibility for the audit with the other auditor, provide additional direction to the lead auditor on how to apply the principles-based supervision requirements, enhance other existing requirements related to determining the sufficiency of the lead auditor's participation in the audit, the lead auditor's understanding of the other auditor's qualifications, and the engagement quality review procedures for audits that involve other auditors. The proposal also includes a separate auditing standard for situations in which the lead auditor divides responsibility for the audit with another accounting firm. The PCAOB received 23 comment letters on the 2016 proposal. In addition, matters relating to the proposal were discussed in 3 meetings of the board's standing advisory group after issuance of the proposal. In general, commenters supported the proposed objective of improving the quality of audits that involve other auditors and the scalable risk-based approach to the lead auditor's supervision of other auditors. However, a number of commenters identified matters that, in their view, warrant modification or clarification of certain proposed amendments. Those matters principally include the criteria for determining the sufficiency of the lead auditor's participation in the audit, the process of obtaining information about the other auditor's qualifications, the extent of the lead auditor's involvement in planning and reviewing the other auditor's work, the respective roles of the lead auditor and other auditors in engagements with multiple tiers of other auditors. And although rare, the audits in which the lead auditor divides responsibility for the audit with another firm that audits the financial statements prepared under a different financial reporting framework. In these and other areas, the discussion and rule revisions in today's release would clarify or make changes consistent with the intent of the 2016 proposal. In some other areas of comment, for example, definitions, certain planning and supervisory procedures, and engagement quality review, the release would provide additional discussion of the proposed amendments. To provide you with an overview of today's key revisions, I am now turning this over to Stephanie Hunter.
Thank you, Dima, and good morning. I will now discuss key revisions in today's release that are intended to clarify and refine the proposed amendments after considering comments received on the 2016 proposal. These revisions would carry out the policy approach in the 2016 proposal with respect to audit planning, audit supervision, and division of responsibility. First, with respect to audit planning under AS 2101, the release would revise the provisions for assessing a prospective lead auditor's sufficiency of participation by expressly requiring consideration of the importance of the locations or business units audited by the lead auditor. Notably, the importance criterion is similar to the consideration in existing AS 1205. For the divided responsibility engagements, the release would also include a sufficiency threshold that is based on existing guidance that has been applied in practice. Furthermore, the release would revise proposed amendments for understanding the qualifications in compliance with independence and ethics requirements of the other auditor. Specifically, in the area of independence and ethics, the revised provision would require the lead auditor to understand the other auditor's process for determining compliance and the other auditor's experience in applying the requirements, rather than understand each other auditor's knowledge of the requirements. By focusing on the other auditor firm's process, the lead auditor would be in a better position to identify matters that may warrant further attention. With respect to knowledge, skill, and ability, the requirement would be extended to include an inquiry by the lead auditor about the other auditor's policies and procedures related to the training of firm personnel who work on audits performed under PCAOB standards and assignment of personnel to PCAOB audits, not just supervisory personnel. Next, regarding audit supervision under AS 1201, in response to questions from commenters about the necessary level of extent of lead auditor review of other auditors' work, Today's revisions would clarify that the necessary level of detail in the other auditor's documentation to be obtained and reviewed by the lead auditor should be determined by the lead auditor depending on the necessary extent of supervision of the other auditor's work. Additionally, in an audit that involves multiple tiers of other auditors, in which an other auditor may supervise the work of a second other auditor on the engagement, today's release would allow the lead auditor either to communicate the scope of work, tolerable misstatement, and risks of material misstatement to the second other auditor, or to direct the first other auditor to make those communications under certain conditions. Finally, in the proposed standard on division of responsibility, today's release would revise the requirements in the 2016 proposal for the relatively rare situations in which the financial statements of the company's business unit audited by the other auditor are prepared using a financial reporting framework that differs from the framework used to prepare the company's financial statements. Instead of prohibiting division of responsibility in those situations, as in the 2016 proposal, the revised requirements would allow division of responsibility if, 1, either the lead auditor or the referred to auditor audits the conversion adjustments, and 2, the lead auditor's report identifies who has audited the conversion adjustments. I will now turn the floor back over to Dima for the staff's recommendation.
In closing, the staff is recommending that the board issue a supplemental request for comment on certain revisions to the April 12, 2016 proposed amendments and proposed standard. Given the targeted focus of the supplemental request, the staff recommends that comments be received by the board by November 15, 2017. Now we would be happy to answer any questions you might have. Thank you.
Well, thank you, Mr. Andrienko, Mr. Wilson, Ms. Hunter, Mr. Jones. We also want to thank Andres Vanelli, John Powers, Jun-Suk Lee, in the Office of Economic and Risk Analysis, Santina Rocca and Elizabeth Esternach in the Division of Registration and Inspections, Ray Han in the Division of Enforcement and Investigations, and Matt Golden in our General Counsel's Office. Finally, I would also like to thank the Commission's Chief Accountant, Wes Bricker, and Deputy Chief Accountant, Mark Panucci, for their advice and support throughout our process. Mark is with us today. Earlier this year, the PCAOB registered accounting firms began disclosing information that for the first time allows investors to see for any particular audit how much of the audit was performed by firms other than the one with its name on the audit report. These disclosures are pursuant to a rule adopted by the board in December 2015. They're important because in today's world, many audits, particularly of the largest companies, are multinational. The proposal before us today comes at a time in this situation from a different perspective, not one of ensuring transparency, but one of ensuring appropriate involvement by the lead auditor. Our existing auditing standards prescribe the responsibilities of the lead auditors in these situations. The supplemental request for comment we're considering today builds on our initial proposal in April 2016 to strengthen existing requirements for the lead auditor's involvement in the work of other auditors and to establish a more uniform approach to a lead auditor's supervision of other auditors. The supplemental request asks for additional input on certain revisions and clarifying changes to that proposal in response to some of the comments received. As the prevalence and complexity of audits involving other auditors has increased over the years, PCAOB inspectors have observed some firms changing their approach while others have not. Inspections have reviewed engagements that are not well managed and where work performed by other auditors does not meet the objectives of that auditor's role in the audit. The proposed refinements are intended to clarify what, in my view, is a risk-based, scalable approach to improving the quality of audits involving other auditors. The proposal would direct the lead auditor's supervisory responsibilities to the areas of greatest risk, consistent with our risk assessment standards. It would also require more communication by the lead auditor, as well as a more robust evaluation of the other auditor's qualifications and works, and I look forward to further public comment. I'll now turn to my fellow board members for any statements they may wish to make. We will withhold questions until all board members have had a chance to make a statement, and then we'll have time for questions and discussions. With that, Mr. Harris.
Thank you, Mr. Chairman. As I explained in my April 2016 statement on the proposed amendments on audits involving other auditors, I view this project as an important step forward in addressing the audit quality concerns that have been brought to our attention by our inspections division. I believe this project will improve investor protection because it will increase the accountability of the lead auditor in overseeing the work of the other auditors involved in the audit. As a supplemental request notes, the work of other auditors accounts for a significant share of the audit in many instances. As you noted, Mr. Chairman, under the board's transparency rules adopted in December 2015, information about other participants taking part in the audit, along with the percentage or range thereof of work performed by them, is now available to investors in Form APs filed by audit firms. As of September 20th, 2017, approximately 114 Form APs that include information about other participants were filed with the PCAOB. Information about other auditors conveyed in those Form APs indicates that while the reported number of other participants taking part in the audit varied, for one audit, 24 other participants are reported as taking part in the audit, and in another, 23 other participants. In a number of audits, the aggregate percentage of participation by the other participants was in the 60 to 70% range, and in one audit, the percentage of participation by the other auditors totaled 97%. A number of the other participants identified on the Form APs are not registered with the PCAOB and therefore not subject to PCAOB inspection or enforcement. As a result, investors have no insight into these firms' audit quality. The percentage of participation for some of these other participants was as high as 83%. This information clearly shows the extensive use of other auditors and the significant role other auditors play in audits today. It also demonstrates the need for greater supervision by the lead auditor, who is the one signing the audit report. This proposal provides for that additional supervision. As public companies expand their global footprints, auditors will increasingly rely on other auditors to help them complete their work. As I noted in 2016, based on PCAOB staff analysis of inspections data, about 80% of Fortune 500 audits performed by the top 6 U.S. firms involved other auditors, many of which are foreign affiliates of the firm signing the audit report. The increased use of foreign affiliated firms raises certain audit quality concerns for investors. For example, our inspectors have observed a higher rate of deficiencies for foreign affiliate firms than their U.S. counterparts from 2011 to 2013. As noted by Claudius Modesti, the board's director of the Division of Enforcement Investigations, cross-border audits that involve the use of other auditors are a high priority for our enforcement division. A number of our recent enforcement actions against foreign affiliate firms involve not only audit failures, but also improper alteration of documents. I continue to believe there is a need for PCAOB standard setting in this area. I believe the board's proposed amendments issued in April 2016, calling for increased lead auditor involvement in and evaluation of the work of other auditors, presents an appropriate, risk-based, and scalable approach to improving the quality of audits involving other auditors. Commenters were generally supportive of the approach in the 2016 proposal. The supplemental request for comment before us today proposes certain clarifications and provides the explanations to address some commenters' concerns. The board has been examining this topic since 2010. While I appreciate the board engaging in another comment round on this project, my preference would have been for the board to adopt final amendments at today's meeting. Having said that, I support today's supplemental call for comment and look forward to the board taking final action on this proposal in the near future. I join you, Mr. Chairman, and my fellow board members in thanking the staff that contributed to this project. I would like to thank all the staff that you mentioned and also thank the SEC for their thoughtful contribution and support. Thank you, Mr. Chairman.
Thank you, Steve. Board Member Ferguson.
Thank you, Mr. Chairman. I have a formal statement which I will submit for the record, which I do not intend to read here. I simply would like to note that this proposal really is incremental in nature when compared to the draft proposed that was issued in April 2016, but it does provide important clarifications and I think makes it clear that the standard is intended to be scalable. That, I think, is a very important thing. And when the board approved issuance of the April 2016 proposal, I noted in particular my hope that we would receive input on our economic analysis and on the costs and benefits of the proposed standard. And I'm pleased that commentators generally agree with our analysis and did not raise significant concerns with it. And a few commenters asked whether the lead auditor could adjust the extent of proposed planning and supervisory procedures based on the facts and circumstances of the audit, apparently fearing the costs of implementing requirements that are not sufficiently scalable. I believe the standards we propose today more than adequately address any such concern. In particular, I note that they require the lead auditor to determine the extent of supervision of other auditors based on, among other things, the complexity of the work to be performed and the risk of material misstatement associated with the other auditor's work. The use of risk-based requirements in the proposed standard allows for scalability and, in my view, thereby promotes efficiency. Under the approach articulated in our proposed standard, any additional costs incurred in an effort to comply with the new standard are likely to arise in circumstances involving a corresponding and potentially larger risk mitigation benefit to investors. We're not seeking to require additional work and costs for their own sake, but only in circumstances where they're warranted by the risks presented. So I strongly support this new standard. I also want to extend my thanks to the hard work of our amazing staff here and to our colleagues at the Securities and Exchange Commission for their helpful work with us on this comment.
Thank you, Lee. Board Member Franzel.
Thank you, Mr. Chairman. I also have a formal statement which will be posted later today, and I will not read that. But I do want to acknowledge the refinements that are before us today and the significant amount of work that has gone into this project and the importance of this project for strengthening the auditing standards for the lead auditor's performance when other auditors participate in an audit. We've heard of some of the risks and the extent of use of other auditors in some of the other statements here this morning, and certainly the staff have gathered a lot of analysis and data on this issue, and we've certainly seen inspection results that call for improvements in this area. When more than one audit firm is involved in an audit, it is important for investor protection that the lead auditor assure that the audit is performed in accordance with PCAOB standards and that sufficient appropriate evidence is obtained to support the audit opinion. So as we described in the 2016 release, the need for stronger auditing standards in this area really has become evident, and that's what that proposing release was geared toward. And when we released that proposal, we solicited public comments on various aspects of the proposal and PCAOB's economic and supporting analyses. I'm very pleased that commenters generally supported the board's objective of improving the quality of audits involving other auditors. And in particular, a number of commenters supported the board's consideration of a scalable, risk-based approach to the supervision of other auditors' work, which I very much support. Today, we've got proposed refinements to some of the requirements, mainly to clarify. And in my view, the proposed requirements, or the refinements, will help enhance audit quality and really clarify how auditors should carry this out in a risk-based manner to really help enhance audit quality in this important audit area. So I call to attention the economic considerations put forward in today's release related to the comments received. That discussion describes how the revisions being proposed today would reinforce the scalability of the 2016 proposed requirements, which should mitigate some of the potential economic consequences faced by smaller firms. As with the original proposal, I look forward to receiving comments on both the operational and likely economic impacts of the revised proposal, as well as the investor protection aspects of the proposal. So I want to thank the staff in all the various offices that have worked on this proposal for a long time, and thank you for the refinements before us today.
And we can now, as we do, entertain questions by the board. Ms. Franzel?
Yeah, I do want to just address this question of refinements versus a final proposed rule today. Could you just describe why we're going forward asking for comments on these refinements, and what led you to the decision to put this proposal before the board today?
Well, this was something that we gave a lot of thought to. Certainly, as you've said and others have said, these are essentially clarifications and refinements building on our 2016 proposal. On the other hand, we also thought in reflecting that this was a very important proposal, as many have said. It addresses a very important issue, and in some of the areas of comment that led to the refinements and clarifications are really central points in the proposal. Things like the sufficiency of participation of the lead auditor and the extent of supervision and of the other auditor's work by the lead auditor. So we thought it was important and appropriate to get some additional input to make sure that the final rule, if you will, would be well understood and effectively implemented.
I just have one question. The comment period is only 6 weeks long, which is short for what we would normally issue for a comment period. Is that because you really don't anticipate many comments, or you figure that you've heard most of what you're going to hear? What was the rationale for that?
The thinking was that these are pretty targeted items, questions that we're putting forward, refinements essentially on a few key points. So not really something that would lead to large conceptual debates. We think something that one could fairly readily read. The proposal at the SRC is fairly short, that they could look at that, focus on the questions and changes, and be able to thoughtfully respond to us.
I just point out that I hope that this can be finalized in short order, Mr. Chairman.
Unless there are further questions from the board, I would ask that all board members in favor of approving the recommendation, please say yes.
Yes.
Those opposed, no. The votes are unanimous. Thank you, Mr. Wilson. Thank you for the team. That concludes the agenda, and there being no further business, the meeting is adjourned. Thank you.